Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, April 2nd. And, I'm just going to take you through the tickers. And I did add an additional one here that I'll probably be covering daily. I'm pretty excited about it. But anyways, let's first dive into the first one, which is, of course, the UVIX ticker symbol UVIX. This is the 2x long VIX futures ETF, which closed yesterday on Tuesday at a price of $37.30, being effectively flat on the day. But now it looks like it's going up about 4.69% in the pre-market, trading right around $39 a share. And so what we can see is we are in this green box. So I am expecting, price to kind of go higher for the next week or so. And that does mean that there's going to be more volatility in the markets. But, of course, I could be wrong, and maybe we do get rejected from this light blue downtrend, or maybe the 200-day moving average up there at around $45. But yeah, we could continue up to maybe get into the 50s as we were there, about, 3 weeks, maybe a month ago. Looks like on March 11th at 52.99 before getting into this red box. And so, speaking about these red and green boxes that I have been drawn up here, they're approximately 2 weeks long, but they aren't always. And so really it's just like whenever there's a big move in volatility, it tends to cool off. And with that being said, I am very curious to actually start to trade this more actively because, I have just been following it for quite a good amount of time. And each one of these boxes, even the smaller ones represent, at least 20% to the upside. And so I feel like that's just a really nice thing to be trading over the course of, 2 weeks, like basically the length of these boxes. And so with that being said, though, it only goes up half the time, the other half of the time it is coming down. And so what is a nice way to maybe trade the volatility, but on the downside? And so that would be, as far as I understand, the best one to be looking at is going to be the SVIX, which is the not leveraged short VIX futures ETF. So going to be very similar to the UVIX, but just going up when the UVIX is going down. And so maybe there's some nice potential to be getting some upside on that. But before I, really get into that too much, I did just want to kind of replicate some of these boxes. So this low was from, let's see, March 25th. So I kind of just want to translate that over to here and start drawing some boxes just to kind of replicate the same type of thing that we got going on. And so I believe that went to, I don't believe it was the 11th. I believe maybe the 8th. Is that right? This extends to April 8th. So just like I have the green box there, I want to have a box over here. Don't want to make it white. I actually want to make it red. And so maybe a week from now, this might be bottoming, and then that would suggest some upside. And then I should note too, the low over here was March 11th, whereas over here, the high was March 11th. So yeah, it seems like a really nice one to be trading, but just kind of going opposite of the UVIX there, or the VIX in general. So just going to make sure I got these highs and lows marked appropriately. So let's see, the high here was 2342. So just going to make sure that is marked right, 2342, 1781. So looks good there. I'm just going to make that box green and lock it in place. And then so this one, going up to that high of 2342. So that is marked, and then the downside really just being kind of arbitrary. I'll have to adjust that. But just thinking about this, when the UVIX pulled back, let's see, by about 45% there, what happened with the SVIX? So this went up, so let's see, approximately, need to just, I guess I didn't lock it in place, but it's giving me a tough time trying to move it. What's going on, man? Why is this bugging out? Oh, it's because it's the measurement. So there we go. So I want to delete that, and then I can adjust this. Okay, that is to the high. Oh, no, I wanted to, let's see. Move that. Yeah, 30% move to the upside. Sorry about that. So yeah, I mean, kind of, mirroring what's going on with the UVIX, there's potential for maybe 10 to 20%, because maybe this bounce was, this move prior to that was pretty big for the UVIX. So looking over at the SVIX, maybe that's, getting a little bit greedy. But yeah, I mean, I don't know. I'm very intrigued to just, as always, trying to improve my trading strategies. And because, even before I started doing these pre-market preps, I would be checking and following up on the UVIX. And so, I feel like I should just get more active in trading this and trading it on, kind of a 2-week time frame, putting more on it when, I think we're getting near a red box, and if it does dip lower, have some more on the side to add, then it rally up. And then when it gets to the top, like I think it will, around April 8th, then maybe it's time to go long the SVIX. And also both of these, they're not hundreds of dollars like trading the SPY would be. So SVIX, I can get the same kind of moves, but just having to put less dollars down per share basis. But anyways, I'm just going to come back to the UVIX. I've spent a lot of time talking about these, and I might just flip over to, let's see, the 10-minute time frame so we can have a look at how this was trading yesterday. It looks like it had a nice run up, but then a pretty big move down, followed by a bounce, and then closed effectively higher, but it does look like, that's actually kind of surprising. It opened, where did it close at? It opened higher than the low, but it had gapped up from the day before, and then into the after hours yesterday, kind of flat after pulling back, and then gapping up a little bit in the pre-market. So we'll have to see with the tariff news today, the Liberation Day, I suspect, we will see some more moves to the upside with the UVIX, and with that being said, some downside, continued downside with the SVIX. And I should actually put an alert here. I almost forgot to do it. Want to create an alert. I'm just going to do it around $18, but for price to be below, because then I think that would, be getting back to these lows, and then maybe there's another kind of 2-week cycle to be going to be riding to the upside. But anyways, let's flip over to the VIX real quick here. Did close yesterday above $28 a share at 21.77. And that being down about 2.3% on the day. Forgot to mention it. The UVIX was effectively flat, and then the SVIX closed yesterday at a price of $20.26, being down about 0.39%. And no pre-market or after-hours trading with the VIX. It does look like it got rejected from this light blue uptrend, but I suspect with the Liberation Day, we will likely be seeing some continued moves to the upside. The VIX is trading above $20 a share, so I suspect we will see some more volatility. And with that being said, I think that the SPY, that is the S&P 500 tracking ETF, that closed yesterday at a price of $560.97, went up about 0.2% on the day, pulling back about 0.4% in the pre-market. I suspect this might be coming back some more, maybe to retest 550. If we do see a spike in volatility, this is going to be pulling back. And so I do have this alert here at around $548. So let's keep an eye on that level. Pulling back to have that alert go off. Let's just make sure it is at 548. That would be corresponding with, breaking below, but effectively retesting again this one at 618 and that green uptrend. And yeah, we'll have to see. Maybe this does start to fade and break lower, maybe to fill this gap around 530, or for this 100% Fibonacci extension at around 513, which would correspond pretty nicely with the bottom over here that we hit on August 5th, being around 513. That low, though, being at a price of 505.48. But yeah, we'll have to see. And, I should probably put this on the 10-minute time frame before switching over to the SPX. Just like the opposite of the UVIX, we had kind of a big move down initially yesterday, followed by a big move up, but then most of those gains were retraced, but then with a bounce into close. After hours, trading did float a little bit higher, but then we gapped lower into the pre-market. Will be very interesting to see where this ends up tomorrow. Maybe getting rejected today by the, 21-day moving average, which is at $565, right around there. And here, looking at the SPX, closed yesterday at a price of $5,633.07, being up about 0.38% on the day. Again, that 21-day moving average, that is the pink line there, that is at a price of $5,673.67, maybe getting rejected from there before retracing to retest the 1618 at $5,542.10, and maybe retesting this green uptrend again. But now let's switch over to Bitcoin. Here it does look like we have been hanging out right around this red downtrending line. I could adjust this a little bit, and let's see, maybe I should be doing that because it does look clearly like there was resistance, but getting above that, so this is not necessarily the best level to be keeping an eye on, because let's see, we have been trading above that line. So yeah, I mean, I think that's a pretty nice one. The pivot point is then going to be the high from March 24th. And let's see that, yeah, we got some wicks testing it over here, nearly over here, but it is definitely resistance over here. So that's why it's a red line. And because we have filled that CME gap from last weekend, I'm going to delete this line here. But I do think that regardless of the size of the move, that's a really nice trade. And so just from, the open from the March 30th, so that would have been Sunday's candle, I believe. Yeah, the open there, at least what I'm seeing in Webull, the move to the upside, that would have been about, 2 to 3% swing trade just over the course of a couple days. So nothing too crazy there, but I do think that is something that is nice to be trading on a weekly basis. So just like the UVIX and the SVIX, I might start to do some weekly trading based on the CME gaps, whether that's with Bitcoin or with Biddy, which I'll go over in just a second. But yeah, anyways, Bitcoin is trading up so far on the day, above $85,000 a share, a coin, but we are still below that red downtrend. Maybe we get a breakout to the upside to test 86,000. That was the level I had noted before, but maybe we blow past that to get up to around 92,000 before maybe flushing to the downside, sweeping out any over leveraged longs, coming down to basically the prior all-time highs from early 2024, about a year ago. Let's see, the highs were around $74,000. And so that's why I have these alerts here for dip buys around 75, 72,000, just $10, so nothing crazy. But then if it does come down to 69,420, I might go very heavy on that, but maybe I would want to diversify, go into some Ethereum or maybe do some other plays. But yeah, I mean, I would be stoked if we did come down to these levels. And also 72, that is based on this 618 retracement that I have drawn here. Maybe we hit it, maybe we don't. Either way, I'm happy. I think that's a good way to look at this. But then anyways, looking at Biddy, this is a ticker symbol BITI, the ProShares Short Bitcoin ETF. It does look like we filled this gap here. I might just delete that because this, I don't really want to be paying too close attention to Biddy, doing much charting on this, what I want to be doing is if there is a CME gap formed over the weekend with Bitcoin, and that gap is to the downside, then I would be interested to get some biddy, on, let's see, Monday pre-market, and then to swing that for maybe a, couple percent swing, nothing too crazy. But that CME gap that I just deleted over here, that would have just been about a 2% move to the upside, but based on where it went to current price, that's around 4, almost 5% move to the upside. So very nice there. But anyways, let's switch over to Ethereum real quick. Does look like it is continuing to test this yellow uptrend, currently trading above 1,800, almost 1,900 there. And let's see, taking a step back, we do have the possibility of this coming down to around 1,500. And so that is, kind of similar to what I'm thinking with Bitcoin over here, with that 69,420 level. I'd want to go heavier on Bitcoin with that level, and with Ethereum I'd want to go heavier around 1,500. And we do have to the downside a green level of support, which just on the daily, I don't know if I can get both levels in the frame here. Now I'm going to have to switch over to the weekly. But what we can see is this green uptrend based on the pivot high from the week that ended June 28th of 2019, and then it looks like the pivot low from the week that ended June 17th of 2022. And so that does look like there's some potential support below if we do clearly break below this yellow uptrend. And also if I do flip this over to the logarithmic scale, we can see that green line does look like it's potentially acting as support here, but we are, unfortunately breaking below it. So, I do think that maybe looking at this on the linear scale and keeping 1,500, in mind might be a good idea. But generally, I feel like there's a lot of upside potential for Ethereum. It's been boring people. It hasn't been performing that well. And to be honest, that's the best time to be buying these things, when people are least interested or least excited by them. So I like Ethereum a lot. But then let's switch over to the last one, which is going to be URA, ticker symbol URA, which is the Global X Uranium ETF. Did close yesterday at a price of $23.08, being up about 0.7% on the day, and effectively being flat in the pre-market. And so we did retest this green uptrend that goes back to, these lows over here. So it looks like the low from August 5th and then September 6th. Those are two kind of dates that I remember, especially August 5th, but then following that UVIX cycle, if we do switch over to here, big spike here for August 5th, I was wondering if a month later we'd be seeing a spike up, and we did, but that move was not, 100%, 300, 400% to the upside. The move over here was, let's see, about almost 60% to the upside. So not that big relative to this one, but pretty big overall. And so anyways, thinking about that related to uranium, we did see some lows around those spikes in the UVIX. And so I feel like this is a potentially very important trend line, and we are trading right around it now, potentially forming a double or triple bottom here. But let's see. We need to be seeing a bounce, volume picking up a little bit, but not enough to really get the V-shaped recovery that we'd like to see. So maybe we do start to test 2214 right around there, which does look like it is the 1618 from this Fibonacci retracement over here. Maybe that's something, maybe it's not. It's just a level to the downside to keep an eye on if we do break lower, right around at 22. And that also, would correspond with the lows from over here, 2214 over here, 2218 over here. So I think that looks pretty good if we do dip lower. But anyways, as always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.